Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legion. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. Here we now want to talk about our support and resistance, how to use it to take advantage of the market. What is the meaning of support? When you have support, okay, when you have support and you have resistance. Just don't mind my handwriting, okay? All right, so when you have support and you have resistance, what is the meaning of support? Support simply means something that is ready to help something move higher. I'm ready to support you in this campaign. I'm ready to be there before standing by you. All right, that is support. I'm supporting you to move, keep moving. Why resistance means, hey, stop there. You ain't going anywhere. Go back. That is resistance. Now we're gonna take a little example from I'm trying to draw something that I believe, or shift to draw vertical horizontals. I'm trying to draw something which I believe a lot of you should know. All right. You see something like this where people jump on it and it bounces them up. All right. You jump on it. You see Mr. A. All right. He jumps on it. Boom. And it bounces him up to the upside. Right. Then the next thing you see him here jumping. This is known as support. This is supporting him to go to the upside. All right. And then let's say he's doing this in a house. Let's say he's doing it inside a house. I don't know how stupid he's going to be jumping on a bouncer to take him to the top when he knows there's a roof. So let's say there's a roof. Okay. When he jumps from here and goes to the roof, what would happen? The roof will resist him, right? He's going to be resisted and the roof is going to send him back down. All right, I should have drawn this just straight and direct like this. The roof would have to reject him, okay? All right, so he's jumping straight up. The roof rejects him and sends him back. All right, so this is what we call support. So price is being supported to go to the upside, giving you the higher high, higher low, higher high, higher low, all right, to the upside. And then resistance resists this price back down, giving you lower highs, lower low, lower highs, lower low. This is exactly what happens in the markets. Another simple example that I usually use is a clear house that we have like this, all right? And you bounce a ball to the ground. That ball goes back, goes straight up, hits the roof and gets resisted and goes back down. Hits the floor, gets supported, go back up. That is what we call support and resistance. Now, how do we use this in the markets? Now, right in the markets, we have the line, okay? We have this line like this. We have this line like this. We're just gonna use these two lines. So we have price rallying from the upside, We have price coming, giving you higher low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Hit support, get supported to go back up, higher high, higher low. I mean to say higher high, higher low, higher high, higher low, and so on. Okay, this is what happens in the markets. Price gets resisted, pushes down straight to support, gets supported, pushes down, goes straight back up. Why price is busy doing this from a resistance zone to a support zone? As a trader, you've got to be observing your market structures, okay? Understanding that price is giving you lower highs and lower lows, meaning that you should understand that price is giving you a downtrend at this era, okay? And at this era, after price met support, you should start observing how price began giving you your higher highs, okay, and your higher lows. Gradually doing that, giving you those push phases till it gets there. Now, there are two different phases in the market we call the push phase and the corrective phase. Price gives you a corrective phase and an impulse phase. When we say impulse, in a downtrend in markets, the down movement of the market is known as impulse. The little pullback or little retracement after that impulse is known as retracement or correction. Okay, so price is trying to correct its move in order to gain liquidity to go impulse again. For an uptrend, we have the same thing. Since it's uptrend, this is going to be your impulse move. Okay, and this is going to be your correction. All right, this is going to be your correction. This is the next impulse move. This is when you hear people say things like price is moving impulsively. All right, and this is what the correction, the next impulse move. So as a trader who is trading a downtrending market, you only want to trade during the impulse move. And you don't just trade anywhere. You don't just trade anyhow. You only want to make sure you're trading at the peak points of the impulse move. Okay. Price gave you impulse here, gave you correction. You only want to look for your entries around this zone. You don't want to jump into a moving train. If you ended up seeing price had moved like this and it's somewhere around here, don't jump into it. Allow it to give you the next correction before you look for impulse. Because oftentimes a lot of traders would come into their chart and they notice that price has just come out of support and is going up, okay? And they'll just be like, hey, let me buy. And they just buy from here immediately. They saw how that price had moved already and they start buying from here, only to be that at that time is when price have decided it wants to begin a pullback. And that pullback might begin to play with their emotions. They'll be like, man, is this thing going to continue or is it going to keep going down? And you see it going a bit down, and they're kind of like, man, I'll have to jump out of this trade. And they're going to jump out of it in loss, only for them to jump out of the trade. And then price ends that correction and begins the next impulse. So you don't want to jump into a moving train. If you end up going to your chart and notice the price had moved out of your support, let it move. Even if it continues to go higher and higher, don't get enticed to jump into it. Wait for the next correction. Then after that correction, follow the next impulse move. Okay, so when price is giving you this structure in a downtrending market, you only want to look for your entries around here, look for your entries around here, look for your entries around here on your lower highs. When price have decided, okay, after this entry price went hitting supports, you don't want to sell from a support zone. A lot of traders would say, oh, I believe it's going to break out, so let me just hold the sell. I believe. Don't believe. Trade the market with wisdom. Once price is at your support, don't trade. Get out of it. If you are in an entry already around here, you can just set your stop loss at break even, which I've taught you guys 2 days ago when we were studying Forex languages. Break even simply means throw your stop loss out from where it was to maybe exactly where you took your entry, or just a little bit out of it. Okay, break even at that time, or you can just accumulate the amount of profit you wish to accumulate and watch what price is going to do at this junction. It might end up playing and begin to range a little bit before it begins the move to the upside again, or it might range and break out, range and retest and continue. Okay, sometimes you might even see it break out, retest, go back a little and come back up again. So you want to be careful of falling prey to those kind of things. All right. So that is why we are learning market structure, for you to know when you should actually begin buying out of a sell. For here, you are selling throughout. The next question you want to ask yourself is, this price is going up. Should I really buy it? Is it worth buying? Or would I be faked out on this? Or should I just allow it to keep going until it gets to my next resistance? Then I'll start looking for the next sell again. So by the time we merge different time frames in this market structure we're going to learn tonight, you'll be able to learn when you should really leave your selling position and start buying, or when you should not even buy and stay out of it, wait for your next sell. Okay? For now, just keep seeing the theory. We'll get into practical on the real chart soon. So this is just what you need to understand concerning your market structure. So as a trader, you only want to look for a healthy market. A healthy market is a market that is giving you the proper market structure, which is what? Your higher highs, your higher lows, or your lower lows, your lower highs. If you're not able to spot out a definite market structure in a market, leave that market, look for another. That is why there are many markets to trade. Okay, you must not force yourself to trade into what you don't understand. That is you gambling. Look for a market that is giving you a definite structure and look for opportunities in it. So once you get into your chart, the first thing you want to do is to go to your higher time frame. So for me, I always use my daily time frame, my H4 time frame, my H1 time frame, and I use 15-minute time frame. All right. These are the time frames that I actually use for my analysis. Mostly, I use these 3. And sometimes I can decide to go to daily. All right. I don't waste my time going to weekly or monthly. All right. So for me to go to a daily time frame means something must have warranted it. Maybe I'm not seeing something definitely, or I just want to observe something more. That is why I will jump into my daily time frame. Else, from my 4-hour charts, I am already satisfied to check out whatever I want to check out and look for my entry around 15-minute time frame. All right. But after this training, everybody's perspective is going to be different. Some people might likely love to trade from 5 minutes. Some might likely want to trade in 1 minute. Okay. But I'm just giving you my own way of trading. So now that you've understood market structure, the impulse and the corrective mode, the higher highs and lower lows, now let us go into the main charts and learn how to find out market structures properly, and also find out how to use them on on different time frames till we get to our entry time frame. Okay, so by the time we understand how to do those things, trading is going to be even more easier for us. So let us get into the charts. So now that we've understood this little logic, let us look at how price play on the real charts. So right here on the real charts, price on this side gives you the high. All right. This was the impulse move. Now, there is one thing you would notice during the impulse move. You would always notice that those who are in power tend to show more than those who are not in power. You would notice the bears, their candles are more and even stronger. Why? If the bull shows up, is you see rejections, weakness. All right, because it's not their markets. You see weakness. Even when they tried going for their pullbacks, they were weakly moving. All right, but when the bears show up again, they move strongly because it's the market for the bears at this era. So the bears were really strong during this era. And at the same time, they were respecting the supports and resistances, okay? So price giving you the high, the low, the higher high, the lower high, the lower low, the lower high, okay? The lower low. You can take it to be the first low, okay? Price went, okay, low, came up here, respected here, came down, gave you the next low here, okay? Impulsively moved to the upside, all right? And went even lower. The next low was here. Then at this time, it failed to move, to break. Came down, came back here, came down. At this time, price was just ranging. So at this time, they were trying to decide, where are we going to go? If you try to observe this era right now, try to observe this era in a higher time frame, one thing you would notice is that this era would be like either a doji, or you would see two pin bars on the top and on the bottom. Let's go to, let's say, daily time frame. If you don't see it on daily, you might likely see it on weekly or monthly. I just hope we'll be able to see that. Let me look where it is. Okay. Okay. Weekly. Let me go to weekly so we can. Okay. On the monthly, it was inside a candle, so you won't be able to see it because it's inside in between these two candles. Or if you go to the weekly, you'll just notice in the weekly, you see we have this doji here. We have the red man, the white man with indecisions. Okay, so during this era was indecision before price began rallying to the upside. Again, if you try to observe, let's say this doji that we have here, okay, and then go to the 4-hour charts. Okay, this was price giving you some rough movements, going to the upside gradually, but giving you some rough movements. Okay, so at this time, price here was the resistance of price. Okay, and price kept on ranging up and down, collecting liquidities from different directions. This is where it's going to hit people's stop loss. It went down. Some people are actually going to put their next trend line here. Okay. So price came here to hit support, went here. People are going to think, oh, it's time to buy. It's going to fake them out, come back here. They'll think it's time to sell, fake them out around here, go back here. So at this time, it's just grabbing money left and right from different directions, trying to gain strength to move. So it could either be that after all these movements, the bulls grabbed more money than the bears in order to push price to the upside, okay, until it got to this resistance, which was somewhere around here in the past. All right, it got resisted. After the enough money they have gathered from here, they used it to push to this extent, remembering the fact that it's still a downtrend until the structure is completely broken. Okay, so after grabbing all the money, they pushed to this upside, got to resistance, and the money they got had finished probably, and then the bears started pushing back down again. All right, the bears started pushing back down, continuing the normal movement. So during the era when they were actually pushing up, you could observe market structure also, the high, the higher low, the higher high, okay, probably the higher low. But at this time, price failed to create a new higher high, but rather stopped here, almost at the same resistance zone, and then started giving you, you will call here also a high. This is going to be a new high. Since it wasn't higher than the previous high, it's going to be a new high. This is going to be a new low. So from a new low to a new lower high. The next one was lower low, lower than the previous low, lower high. Okay, almost the same thing again at this junction. Okay, so price, you're gonna call here a new high, a new, so a new high, a new low, a new low because a new high has been created. So from this low, it gave you a new lower high, because at this time is a bit lower than the previous low, the previous high, which was here. So it's lower. So you call it a lower high. So you need to be able to understand your market structure and how to define it. So you only want to see price being healthy, moving healthy, before you know you should look for selling opportunities. So from here, price went lower. Okay. So while you're understanding your market structure, don't forget to also observe your supports and your resistances, because price would only go down from resistance and go up from supports. So at this junction, price is currently at support. All right. This was during the era of the range. So I don't really consider this something I should be looking out for. I should only focus on this. Okay. Should only focus on this. So price coming back here, getting resisted here, coming down. All right. At this junction, this is where I should look for selling opportunities, selling, because it's a general downtrend. All right, which went for some naughty phases and now has begun the move again. So looking for your selling opportunities all the way from here. During this impulse move, you should have looked for your opportunity somewhere around here. So to this extent, all right, probably still in the trade or gotten out of the trade, whatever it might be. But if you had come into the markets now and saw price here like this, it is not advisable that you start trading. You just jump in and sell. No, because two things your mind is going to tell you is, hey, it's selling, sell. Another thing your mind is going to tell you is, hey, it's probably coming down here, sell. Don't fall prey to it. Just leave it. Wait for the next pullback before you sell. If you don't see the next pullback, don't sell it. Yes, you have defined it. That is a definite downtrend. Yes. Okay, price is going down. Yes. But you will need to wait for the next pullback before you look for your selling opportunities. All right. So you wait. You wait. Good. So at this junction, price had begun a pullback. This is where you now want to look for opportunities to sell, right? But before you sell, you might likely want to say, let me wait for the next resistance. If price can come back to this resistance, then I will sell, all right? Because it was a support before, all right? When it was broken out from, it likely turned into resistance during this era. All right, price resisted, gave you reactions during this era, came down. So I have the belief that anytime price comes back here, it should resist here and push down. All right. So I would like to wait. I don't just want to jump in because I saw the pullback, because I don't know if this pullback has really ended or not. So the only way I know that I can be safe is if I can see this pullback get to a resistance. Then I'll look for a selling opportunity, right? So I will just have to rather wait to see what price is doing.